There we go. All right, we got audio, we got video, we go. Oh, what's going on, everybody? Um, Try to make this kind of short, but there's going to be a lot of good information in here if you're even at all interested in how I make my money. I know everybody in here's kind of got their own system. Um, you know, always trying to convert people. So uh, I think the way I trade is super simplistic. Doesn't need much thought process to go into it. Um, Pretty simple to execute, and uh, I only rely on one indicator. It's really not what I rely on. It's just adds to the confluence of certain trades, and I'll show you what that is. So I start with my 4-hour charts. I don't do a weekly or a daily. I mean, on the 4-hour chart, I know the daily is in a downtrend at the moment. Um, could just be a pullback, might not. Um, we made some equal lows down here, so that's kind of interesting to watch for. If we start heading back down, that may very well be our draw on liquidity. We are in the buy side of the market maker model. We took liquidity off these equal lows and then got our market structure shift, and we're headed back up, just depending on where we go from here. So my 4-hour chart, all I do is mark up my 4-hour swing points, which is the neon green signs. I mark a couple of 4-hour fair value gaps. This is all we have left of this fair value gap. And this is the fair value gap that we are currently in. We do have a bullish fair value gap below us. If we start to go back below the midline of this fair value gap, then I will take a look at that and see how we react when we get there. Um, so 4-hour fair value gaps, 4-hour swing points, and my 4-hour dealing range quads. Um, so this is our last dealing range to the downside, and that's what we're working with currently. Then I go to the 1-hour, and really the only thing I do here is the 1-hour dealing range, which is this right here. Since we broke structure, we take the lowest candle between this high and the break of structure, and this is our 1-hour swing level. We've started our pullback, so we were able to anchor um, the swing high here. All right, so that is that. I think that's actually upside down. I'm gonna just, it really doesn't matter how you put these on, just uh, as long as you have them on. It really doesn't matter. Okay. Lock that in. That's all I do with 1-hour. I don't worry about fair value gaps. I use my 15-minute fair value gaps, and I know, through this 1-hour candle, I actually have three fair value gaps sitting there. Um, so I just don't worry about it. So then we go down to the 15-minute, and I want to mark out my latest 15-minute dealing range. And we did uh, have our pullback here. So we started our dealing range. Since we did make a low below this range, and then we went up and broke structure, um, I'm counting this as our dealing range. So from this candle up to the high, I will count that as our current 15-minute dealing range. And I'll put my quads on that. Um, and we'll go from there. All right. So, um, yeah. All right. So that's how I start off my day. Now, these purple fair value gaps are just that 15-minute fair value gaps. Um, They do, none of my fair value gaps have borders on them until they are inverted, and then I will show you why those are inverted later and how I use them to trade this afternoon. Um, so that's pretty much all I do for the 15 minute. I do look for 15-minute ranges so that I can find manipulation on those ranges to take a trade in one direction or the other based on my higher time frame uh, directional bias, okay, which comes from the 4 hour. All right. So this morning we had a great opportunity. I was still sleeping. I was up till 4 in the morning. Did not get up till about 11 o'clock in the morning. Um, but in the pre-market from midnight to the London pre-market, we had this 15-minute range. The London uh, pre-market went down, did not break the low, and started to come back up and went back into range. Now, um, Kobe, sorry, just ate. Now he's still digging for more food. Um, you know, you could put through the overnight. This is how a dealing range works. Okay. So when we had this pullback start right here, I would go ahead and put on my 15-minute dealing range. Um, you see, we came down to the 25%, and then we broke structure again. Um, so I'm just going to kind of add to that dealing range. We're still in the overnight session. Uh, kind of see what want to see what happens. We haven't really had any consolidation and then a break, or manipulation then break, but we do here. We consolidate again, like I said, from midnight till about London's pre-market at 2 a.m. And then we manipulate down and start heading up. Now, as soon as we broke above that range, um, because we are bullish at the moment on the 4 hour, right? Um, we're looking for longs. So we didn't have the upside manipulation, then downside, and then take off. We just had a one-sided manipulation, which is fine. Um, because if you actually, let's take this one off. Because honestly, what I would have is the last dealing range. At this time, we're still dealing in a downtrend, right? Um, so if I take the last 15-minute dealing range from here to here, this will show you a little bit better. This is what you would have on the chart at the moment. We didn't have this 15-minute dealing range, right? Um, oops, that was the 1 hour. Shit. Okay, never mind. We'll go back and fix it. This would be the 1 hour dealing range uh, as well as a 15-minute. I'm pretty sure there might be. Uh, no, I don't think there would be. So this would pretty much be the 1 hour and the 15-minute at the moment. Um, you could say your 15-minute. Uh, well, no, we didn't break any highs, so we're still in our downtrend. Um, and we did have displacement that broke a low, so yes, you could say this is your 1 hour. Sorry if I'm confusing you guys. I'm just kind of looking at past. I didn't draw these out before, so I wasn't exactly sure uh, what I would be looking like. So um, there's that one. I am going to take this one off for the moment um, because if we're looking at the overnight, we want to kind of see what's going on, right? Um, so we have our 1 hour dealing range down. We have our 15-minute dealing range down. Displacement that broke structure is a dealing range. So we look at all these levels and we're going, if you come in trading London at all, you get to see this. Uh, you know, we're ranging right at the point 0.5. We broke through. This is the 4 hour, the blue. So we broke through into discount pricing and immediately started heading back up and inverted this fair value gap here. So that would be our last fair value gap breaking into discount pricing that was pretty much inverted right away. Um, and then we come up and we get to the 50 and we kind of chop around a little bit. Then our manipulation breaks below the 25 uh, of the 15 minute and below the 50 of the 15 minute and below the 25 of the 1 hour, right? So you have these three dealing range levels stacked on top of each other, and we're kind of fighting between the 5 of the 15 and the 5 of the 4 hour right here, right? So we manipulate down, we immediately come back up into above all of them. And when this candle displaces above the 4 hour, which is our higher time frame bias, right? We're bullish on the 4 hour because we're on the buy side of the market maker model. Um, this is where I'd want to take a trade right here. Okay. Uh, I missed this trade. Obviously, I said I wasn't here. We also create a 4 hour, 15-minute fair value gap through this quad limit, right? So we can put our 20-point stop loss on, which covers just back below the 50, and also covers that fair value gap, right? Um, so, you know, we get in on this candle, we move up, we're in profit, and then we just start consolidating again. And this is all the way through London, and I'm okay with this. I'm in profit. I'm only risking $200 here. Um, and we've broken back above key levels on the quad ranges, on all three quad ranges. Okay. So we have went bullish through the 1 hour, the 15-minute, and the 4 hour, and then made a fair value gap. That is a good signal that we are now moving in the direction of our higher time frame. Okay. And especially after a manipulation move below a range and then back up to break the range, right? So I'm good just holding this trade. And this is, from, well, we get in the trade at 3:45 in the morning and we don't do anything until, you know, 4 hours and 15 minutes later. Um, I'm just holding the trade. I probably just go to bed, and wake up super, 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 super fucking happy. But, you know, we're holding through this. If I'm up, which I usually am, and I'm just holding this trade, I see the manipulation up back into range, and I'm okay with that. Now I'm looking for the manipulation down for us to continue higher, right? Well, we get that manipulation down on this candle here that breaks range below. We go back into range, but then we come down and do our fake out breakout, which just so happens comes down and hits that first 15-minute fair value gap that was made from the lows. That also broke through all of our levels uh, and created our fair value gap, right? And lo and behold, it touches that, does not break the midline, basically comes right down to the midline, pretty close, couple points, and then heads back up. And at 8 o'clock in the morning, we break the high of the manipulation. Okay. Now, if we put a deviation on this to see where we could go with it, right? We kind of want to look for deviations for target profits, right? Um, I don't much use the deviations much anymore. I'm basically just using my levels that I like to work with. But I'll throw this deviation on just for the heck of it, and we'll turn it red. Uh, no, we'll turn it. What the fuck do we want to turn it? We can see it white. Yeah, white. That'll work. So we turn on our deviations, and we can see that the forward deviation is right up here. Um, Against the midline of the 4 hour fair value gap, right? Now, there's another thing I use on my 15-minute chart, uh, and that is my true trader pivot points. And this kind of gives me a little bit better target acquisition. Okay. So my target acquisition here, uh, especially because, the four deviations right here, but we had a very strong candle that closed above it, right? Very next candle starts to pull back, and I'm looking at it, but it doesn't pull back below the midline, and it goes back up again. So this weekly pivot point right here, um, is a very good target area. When we get here, I want to see what it does. Well, it pushes above and then it closes below. I'm out of the trade right there. Okay. There's no reason for me to be in that trade. Right. So that is a 16.5 to 1 trade if we put on just 5 contracts because we only want to risk $200 on our initial uh, entry. That alone is a $3,300 trade. Okay. Now, there's something else to look at here, right? Because I always want to add to my winners. So where can I add just based off this chart alone? Uh, where could I add to the trade? Well, I was in the trade on this candle here. When we come back and test that fair value gap, don't break the midline, and that candle closes green, I can add right there. It's really close to my original entry. Doesn't change my original entry very much. Um, so let me take this off for the moment. And if I add it on that candle, our average price moves up. If I put 5 contracts on, our average price moves up about halfway from our original entry to the top of that candle, right? All right, so we're good there. And that was that candle there. So, our average entry is not that high. Well, yeah, that's probably about right. Yeah, that's probably about right. We may even go up a little bit, a couple more ticks, okay? All right, so that's one entry, right? We now have one mini on, 5 micros. So where else can I add to this trade? Um, well, after this candle, we come up, we don't break the highs yet, and we have a down candle. As soon as we break the highs of that down candle, I can add again right here. Okay, another 5 contracts. Well, that's going to push my average price up by about a third of the way. Okay, because we have 10, we're adding 5. Okay, all the while I'm moving my stop loss up. And right now I'm thinking, okay, we broke that high and this is a very strong candle, so I don't need a very high, big stop loss, right? I can pretty much go to break even at this point. Um, and I've got, oh, I don't really want to do that just yet. Damn it, don't do it to me. Okay, there we go. Um, so I'm basically break even at this point because I've got 1.5 minis on. If this comes back against me, I don't want to lose $1,000. Um, but it just starts running. Now my another entry, once this 15-minute candle closes, well, where does it close? It displaces through the daily pivot point, and then it comes back and tests the pivot point and then goes green. Well, as soon as we break the high of this previous candle, I can add another 5 contracts, right? And that's going to push my average entry probably up right around here somewhere, uh, a third of the way. Not even that; it would push it about a quarter of the way. So I'm being really, really conservative on my average price estimates here, and I'm looking to go up here. But at this point, I have a risk-free trade, okay? Because I'm going to, I'm down right around the bottom of this fair value gap here, and we still have this fair value gap here. So as soon as the next candle goes up and closes, and then the next candle comes down and then breaks the high of that candle, I can expect we make a fair value gap here, But I definitely know we have this fair value gap here. I can actually move my stop loss into profit at the bottom of this candle. Okay. Um, but at this point, what do we have? We we got in 5, we got in 10, we got in 20, and we got into 25. So we've got 25 uh, micros in from an average price right around in here, right? Um, and so let's just see what that looks like. Uh, 25. We still have a $200 stop loss, but that's an $11,000 trade if we carry that to the pivot point. Okay. And again, you do have the previous day's high here, but look what happened. I mean, we just push all the way through that and we displace through the previous day's high. We pull back a little bit here. Now we're close to our target, so I'm not adding to the trade here. There's no point in adding when you're that close to your target. Okay, all you're doing is raising your average price up and not getting a whole lot of extra movement on those extra contracts. So it's really just not worth it. But we pull back and then we break the high of that candle. We start heading for here. Well, we've made a fair value gap here, right at the previous day's high. So we fair value gapped through a time-based liquidity. A pretty good signal for continued bullish price, right? So you definitely can hold this trade to the weekly. And when you see that weekly fail on the 15-minute candle, we don't close above it, you get out of the trade right there, $11,000. Okay. Fantastic trade that happened this morning. The last couple of these that have happened in the pre-market, I have missed. I have not been up and I have not been on the charts, but that's okay because right now I'm just paper trading and fine tuning all of this together with my 4-hour swings, my fair value gaps, my multiple time frame quads, and my pivot points. Okay, so beautiful, beautiful trade that could have taken this morning, um, and I did not because I wasn't on the charts. So, what did I take today? Well, I came on around 11 o'clock, um, and we had the pullback, and we had started moving back up, and I noticed that we had some consolidation here, a little difficult to get back through. Um, this fair value gap because this one actually went inverted. Um, so that would be a 15-minute invert. That puts the border around. That indicates to me that that is an inverted fair value gap. We had a lot of trouble at the halfway point and then finally broke through. So that became a fake flip, and that fair value gap can now disappear. Okay. We make a fair value gap, we invert it. Once we get back through and invert it, I'm done with that fair value gap. I take it off the charts. Okay. Um, so I come onto the charts somewhere around here. I notice that we've done all that. We've closed above the midline of the 4-hour fair value gap. We had our pullback to the daily pivot point. We came back up. We broke back above and reclaimed the previous day's high. We've gone through the inverted fair value gap, and now we're pushing up for these highs. Um, and at the moment, I just didn't want to take a long. I wanted to see what happened. Because if we did break the high, we've got the daily pivot point up here for a possible reversal to come back down. That's tradable. At the moment, I don't know where I'm at, so I'm not doing anything. Okay. So let me go ahead. We still have our 4-hour. We're going to close the deviation from the trade that could have been taken this morning. We're going to close. Um, are we going to close? Yes. We're going to close the 1-hour quads because we have now broken above this high for a break of structure, right? So now we need to put on a new dealing range as far as the 15-minute and the 1 hour go. Um, we're still in the 4 hour dealing range. We haven't reversed yet and gone to the sell side um, for us to redo our 4 hour uh, quad levels, right? Uh, what is that extra line there? Oh, okay, never mind. That's a 4 hour swing point. All right, so we have our 4 hour quad. We now have a new 1 hour quad, which would be from here to here. And we can mark that up as soon as we get this pullback right here, right? And if we go and we break, we go and break the high, then we have a low point for a new 1 hour quad. Uh, did I not? Did I not? Quads. There we go. Quads. This is a 1 hour, so it is orange. Um, and as well, um, we had our range. We made a low, so we broke lows on the 15-minute. Immediately went back up and broke structure to the upside. So we now have a new 15-minute quad to start as well because we have our high, we have our pullback. So we will start our 15-minute quad from this low to this high. All right, and our 15-minute quads are purple, and there we go. All right, so now that we're pushing back up towards the highs, and I have all of my quads marked out, uh, I want to see what's going on, right? Um, so let me remove that real quick. So on the way up, on the 15-minute, um, this 15-minute bear that we invert on this candle on the way back up. Okay, so that is going to be a 15-minute invert, and we're going to watch that. It is not really at any of the quad levels. It is at this monthly pivot point and the previous day's high. Um, and we inverted it with a nice, strong 15-minute candle. Okay. So what I'm watching, I'm just sitting here watching over this 30, 45 minutes right here to an hour, just kind of seeing what happens at this inverted fair value gap with these levels around it. We do have the 25 of the 1 hour sitting right here below these levels. So even if we do get through there, I want to see this hold since we are on a bullish day. And this right here is when I get in the trade. Um, as soon as we come down and retest the previous day's high. Okay, this is where I'm interested in taking a trade. As long as we don't close below this inverted fair value gap, which we don't, we end up pushing right back up and closing above the high of the previous candle and above the inverted fair value gap. So I am very interested in trading in here, finding a way to give myself a very small stop loss. This is where the bot comes in. Okay. Um, so Go back over, squeeze this in a bit so we can see everything. Okay, so that is the candle. This area right here, we are still, and you actually get a sell signal right here, but I am looking to buy. Okay, it broke once, closed above. It broke twice, swept that low, but did not displace. It came back and closed back above the previous day's high. This is where I get into the trade. Okay, and I get into that trade with a super, super tight stop loss. Okay, because I'm going to get in at the close of that candle, and my stop loss is going to be just below that candle. Okay, about, oh no, let's go further. There we go. Just a little over 10 points uh, to cover that candle. Okay, and again, I'm only going to enter with 5. Okay, on this candle because I'm not sure if this is going to hold or not. But this is going to give this to me. This is where my high probability trade is. Okay, um, we've got in. We just inverted this fair value gap. We're coming back to test the pivot point, and you can see the pivot point. It just barely cracked it and then just popped right back up. So we've got the pivot point, uh, monthly pivot point, the previous day's high, and an inverted fair value gap. I am super, super uh, happy about taking this trade. And if you really wanted to mark it out, you have a high here, you have a down push uh, handle right here. Where is that? That's a big ass down push. Um, Even if we just use the body and we call that order block, um, then what do we do? You know, you've got way too much confluence here not to take along. Um, Even if we could just end up in a range, you know, ooh, I'm still going to take the trade. So I take the long right here. I've got a really nice tight stop loss, about half of what I can normally trade. I don't know that till I measure it out. So I'm always just entering with 5 contracts. I know I'm got more than 20 points to spare here, right? Um, from my entry. So I'll enter that trade with 5. Okay. So this is where the bot, Greg's bot, comes in. And thank you very much, Greg, because you have changed the way I add to my trades. Uh, I used to just kind of pick random spots based on how candles were forming to add to trades, and a lot of times that would get me in trouble. But now I have a rhyme and a reason to add to my trades. And guess what that is? I am in a long on a bullish day with a bullish 4-hour market maker model. So anytime this thing gives me a buy signal, I'm adding to my trade. Well, where's my target? Well, we came up, this was our high from the big displacement. We came back down, uh, hit the daily. We didn't make it all the way down to the 50%, right? Um, yeah, but where's our purple? Where the fuck? Where the fuck did our purples go? Did I not do the 15-minute? Okay. Alrighty. Shit. Let's let's put that on. I did not do my 15-minute dealing range, which was from this low, because we did actually hit the 50% mark of that dealing range. I knew we did because I marked it out earlier. So now there's our 1 hour, our 15-minute, and our 4 hour, right? So up in this area, where's anything matching up? Well, the 50% mark is right around the daily. The 25% mark is right around the midline of this order block once it's made. We've already hit the 50% mark, which in itself could have been a long from there. Okay. But again, I missed it. I wasn't on the charts until this area right here. So now we've come down into all this confluence and I take the trade. Well, I'm in the trade on this red candle right here. And 7 minutes later, I get an add signal right here. Now that's going to push me up about 50%, which is going to be right around here is where my new average price is going to be because now I'm going to be in 10 contracts. I'm also going to pull my stop loss up pretty darn tight, okay? Because now the bot is telling me I have momentum to the upside. I'm already in the trade, but now the bot is saying, hey, now we should go up. Is that not cool or what? So I add right there. And we're running up. We're running up. Um, can't remember what I did there. Before I was done with this trade, I was in like 40 micros. So I could have sworn I gave us 2 buy signals over there. I know we had more buy signals on this chart. Sure, this is on MNQ. Yep. We had a buy signal here. I know I had it over here because what did we do? We ranged for a moment, then we broke to the top of the range. So I added over here. Okay, that's going to pull me up a little bit more on my about a third of the way. And then we had our dip down, and then we broke the high. I added it again. Let me take this one off. Okay, I added again right here. That's going to pull me up a little bit more. All right. Um, and then we had our pullbacks here. And as soon as we broke this high right here, I added again, which is going to pull us up a little bit more. And I can show you exactly where it's at. And of course, I'm moving my stop loss up even further each time um, because I'm adding contracts to the trade. So, where am I targeting? Well, our previous high was up here at the weekly pivot point. We've now gone into internal liquidity and started our push up. So I'm looking for us to at least sweep this high. But there's really nothing else around there other than this high, except for this daily pivot point. So that's where I'm targeting. Okay. Now let me get this about right because I can tell you exactly the profit targets I was looking for. Okay. Uh, so clear that. I was in 25, 30, 35, 40 contracts. Um, okay. I added on this candle over here my average price. I actually had this below. It was about 8,300, right around in there. I didn't wasn't looking for it to go all the way there. I just wanted to front run it and take an $8,000 payday, right? And I almost did get stopped out, which is why I can tell you that my bridge was right around in there, and I was pretty damn close to break even. Okay, because this candle came down, and this was the one that worried me. After I had added right here, I was a little worried since we'd already had one down push that was going to come and sweep these lows and possibly take me out of the trade for break even, right? Um, and that was, we added in this one here. So all of our ads were between our entry and the top of this range. Okay. Um, but we were in 40, yeah, about 200 clear, 25, 30, 35, 40. So you can kind of see what's going on here. Um, Squish this down. We had this pulled down around 8,300. Okay. Down. So, you know, obviously we didn't start out at an 83 to 1 risk reward on this trade. Um, but that's pretty well where we ended up. If you spread that out, you can see it. Anyway, um, these are the trades I love, where you basically have almost zero risk uh, on the trade. So what happened? Well, we got up into this wick, and I actually, at the time it was going on, I went ahead and I put a quad on this wick because I wanted to see if we get above the 50% mark, right? Well, we got above the 50%. We hit the 7.5 and we pulled back. We closed below the 50%. At that point, I was, you know, a little disheartened. We were still above the weekly. We were still above the midline of this fair value gap. But at that time, I said, you know what? I don't want to lose any money. I want to make some money on this trade. Okay. So I pushed. Okay. So this was probably a little bit higher, right around there, because my stop loss was right around there, below the midline of the fair value gap. Um, and I said, okay, I want to give myself the opportunity because we're still holding levels right here to make this $8,000, but I'm definitely going to lock in some profit just in case we do decide to reverse since we didn't close above the 50% on this candle. Give ourselves a chance to get through the next candle. I could have taken the trade off at that candle for $3,400. Um, I could have closed the trade at the 50% for $4,000. Uh, but I'm giving myself the opportunity to make as much money as I can on the trade, you know, with my thought process of we made a high, we pulled back internal liquidity. Now let's go take this high out and reach for this daily. Okay. We had a very bullish morning. Yes, it was a big move. So, you know, maybe we don't go higher. We just consolidate like we did. But there's always a possibility we just get the pullback. We go even higher and try to take out this daily right here. So that's my thought process. Well, we ended up getting stopped out for $2,000 in profit. Okay. As soon as that happened, all right, I decided to go short. Okay. Um, and at this moment, I'm not looking for a very big trade because we're bullish on everything. We're bullish on the 15 minute. We're bullish on the 1 hour. We're bullish on the 4 hour. I'm not looking for a very big trade, but we did close below the midline of this fair value gap. So the moment this takes me out and closes right here, I take the $2,000 and I immediately go short. Now I was not looking at the buy at that time. This was just purely, um, price failed to take the high. We've now closed below a 15-minute midline, fair value gap midline on a 15-minute candle. In my brain, it's just, okay, we're flipping the switch, we're going short. All right. And I went short there. At first, I was risking above the weekly pivot point, and let's just see where we're at. Okay. So I went short on this candle at 635. So 635 was way down here. Okay. So I went short right here at the close of that candle. All right. We pulled back up and then we went red again. I added everything right there. Okay. And that would pull me down to just about that level. Because again, I started this trade with 5 micros. As soon as I saw the buy go back red after a short pullback that didn't even close to break the high before going back red, I went in and I was 40 contracts at that point. I pulled my stop loss down halfway between the midline and the fair value gap, the fair value gap midline and this here. Okay. Um, and what I was targeting was the bottom of this 5 minute fair value gap. Now, here was what I was explaining earlier. I'm not looking for a very big trade here. So I don't want to trade the 15-minute chart. I want to trade the 5 minute chart. Okay. Uh, and I just want to take this low because I was looking at these lows over here and I'm thinking, okay, well, if we're not going to break the high, we're going to come down, we're going to sweep some lows. And these 5 minute lows looked really good. We had this 5 minute fair value gap. Uh, we could sweep it and then take off, right? So I enter the trade here. I'm just above the midline on my stop. Okay. And that's all I'm looking for. But I'm in 40 micros, right? Okay. So I'm risking about $1,000 at this point. Okay. Why would I risk $1,000 when I typically only risk 200? Well, the very next candle inverts the fair value gap. So this has to be my stop loss because now this midline needs to act as resistance. Okay. Because this is now an inverted fair value gap. Okay. And actually uh, my average price was a little bit higher than that because that is exactly where I got out of the trade. And it was a $2,500 trade. So I need to find that spot. Okay, with 40 contracts. 25, 35, 40. All right, let's take that off. This was going to be a $2,500 trade. 2,500. Okay, and my stop loss, again, at the beginning was above here. I was risking $1,000. Okay. Um, got a little nervous on this candle here, but as soon as it wicked back down and closed below the high of this last candle, I went ahead and pulled my stop down to just above the midline. So at that point, I was only risking $300. I'm thinking, okay, the midline's going to hold. We got a nice big sell wick on this 15-minute candle, and now we should go down and hit our target. Well, this candle pushes down. I mean, so close to my target. I'm sitting there looking at it. I'm going, should I close it? Should I close it? Should I close it? And before I could hit the button, it just jams right back up. Okay. Boom. Closes here. This candle, starts to go up, then comes down, finally hits my target, uh, for another $2,500 on the day. Uh, and so we end up with a $4,500 day on two trades. This one I did have to sit in for a while. It was about an hour and a half before it finally came down and hit my target profit. Uh, but I'm okay with that. This trade I was definitely in for quite some time. I got I got in at 12 o'clock, and it ended up stopping me out at 1:40. So I was in that trade for an hour and 40 minutes. Um, so I'm definitely not scalping, trading off the 15-minute chart. Um, and this has been a really big help uh, to tell me where to add to my trades. Okay, because when we get the pullbacks, we get the pullbacks, and then we get another sell signal. I know, momentum is still heading in the direction of my trade. I can add to it. Um, just depending on, how much do I want to add. In this particular case, I started off with either started with 5 or 10 contracts on that trade. And then I went heavy as soon as uh, I realized I could, and got in 40 contracts there for 4 minis total. Um, I did not expect to be in this trade for an hour and a half. Uh, but when you're holding 40 contracts for an hour and a half and it's not moving in your direction, it's just bouncing. It sucks. I hate those trades, but I was willing to risk it. Initially I was risking $1,000. I had already made two. If I lost this trade, I'd still end the day with $1,000 profit. I'm okay with that. Um, but giving myself the opportunity uh, with having this inverted fair value gap now, uh, knowing we didn't break the high, then we inverted the gap. We need to find some liquidity down here somewhere. I thought it was going to sweep all of these. It didn't. It just came back. This was a pretty darn strong 5 minute fair value gap because it held here, it held here. We finally broke it over here this afternoon. Um, So that was the day today. Let me take this one off because that is the wick. So that's where we ended up today, and that's how we got there. So beautiful, beautiful trade this morning. That I mean, just you could have off a manipulation move, an early manipulation move, or a manipulation move in the New York pre-market. Either way you take this trade, you're making a ton of money being able to. Well, when did this start going up? 8 o'clock in the morning. Um, I didn't look back here and see, where everything was. Uh, you only got one buy signal on on that push up. Uh, Momentum never shifted for you to get another buy signal. But again, if you're looking at the 15-minute charts, um, it doesn't really show it there. It would show it on a candlestick chart, but you know, if you got in here somewhere, you really didn't get but one ad on the trade. When this 15-minute candle closed, we retested the daily pivot point and then broke the high of that candle. You could add to the trade there. So if you got in the trade down here, you had several opportunities to add uh, and make that. Either way, I'm pretty sure that would have ended up as a five-figure day. Uh, and then you pull back to the five of your 15-minute quad at the daily. It holds. You take a trade. You take a trade off that level. It pushes up. Uh, you know, you get out there. You can hold it. It comes back uh, to the midline of that fair value gap, which is probably where I would have put my risk just below that. Uh, and you could have held that back up to this high uh, for a beautiful trade, or take the long that I took for a very nice trade. Again, that could have been a $4,000 trade if I had just closed in the wick, uh, this wick. But I wanted to give myself the opportunity to make as much money as I could. I still made very good money today. Uh, and that's pretty much that's how I trade every day. The only thing I've added now is the bot to give me opportunities to add to the trades. Okay. Um, yeah, I mean, look, if you took that 50% trade right there, um, you had one, two, three, four opportunities, uh, to five opportunities to add to that trade uh, to get up back up there into that 50% wick and close the trade again. So depends on how you want to trade it. Uh, I chose my path, and I made really good money. So uh, I'm very happy with the day. Making $4,500 in this price action here. Um, I am I'm thrilled with that. You know, these moves don't come around as often, but they do happen. Um, and when they do, I'll catch them as long as I'm on the charts. I got to start getting back up early mornings again and watching what the London session is doing for these pre-market moves that New York has been making several times over the last week. So that's it for today. It was still about an hour video, but I think it was worth it. Everything that was explained in here I think, was some really good information. Um, if you're looking to be a longer term trader with a little bit less stress and making some really good profits, to me, this is pretty much the way to go. It's how I make my money. Uh, you know, it's what's gotten me to where I am. So yeah, all right, I'm gonna cut it so it's not over an hour, and I will see everyone in the morning. I will do my best to be on by market open, if not pre-market. Uh, so yeah, we'll see everyone for the Friday session and see what happens.